Good morning. Today is Tuesday, July 25th. The time right now in Singapore is 10:45 in the morning, and overnight market has been pretty quiet, and that is understandable because markets are waiting for the FOMC, which is going to be due tonight in New York. Sorry, technically it should be tomorrow in New York, but that will be practically on Thursday at 2 a.m. Singapore time. So going into this FOMC meeting, market has already priced in a possible 25 basis point rate hike by the Federal Reserve. Remember, last month, the Federal Reserve chairman has actually told us, although they paused interest rates in June, but they tell us that at the end of, from now until the end of the year, we are going to look at 2 more possible rate hikes of a quarter point each. And if we include this week's quarter point rate hikes, that means the market is only looking at 1 more rate hike for the balance of this year. And more importantly, the market is unlikely to move just because the Federal Reserve hike quarter point this week. But what is more important is the chairman's speech at the end of the rate hike. During his press conference, he's going to be telling us more about whether the Federal Reserve is really looking at only 1 more rate hike towards the end of the year. I think the market here will be looking through his statements for some kind of clue as to whether whatever he said last month is going to be holding water, or like what he has always been saying, that it's going to be data dependent. If the data worsen, he reserved the right to change his stand on further rate hikes. And the market has already priced in the fact that there is likely to be no more rate hike for the rest of the year. So we have to see what comes out of this statement that he's going to put out at the end of the rate hike that we're going to expect on the 26th of this month. Okay, so again, that will be 2 a.m. Singapore time. So market has been pretty quiet leading into this number, and overnight we can see that Wall Street is basically hanging on without doing anything drastic. We see that the Dow Jones is at a year high at 35,463.97, and again, this bracket of prices is, I have always mentioned for the last week or so, that this market is now in a bracket of prices which put it very vulnerable to correction, and that level is 35,233 to 35,824 levels. Okay, so do watch out for any kind of correction, and if we do get a reasonable correction, my immediate target is 33,610 to as far as 32,586. So this is going to be quite a bit of a drop here if there's going to be a correction. Okay, in the S&P 500, we are also seeing the same thing. The market has not been going up this week so far. Yesterday market has been pretty quiet. Nobody dared to take the market much higher. The year high so far was registered last week at 4,578.4, and we can see that again, very similar to the Dow Jones. We are right now in the bracket of prices which I deem to be quite vulnerable to profit taking. That level is 4,548 to 4,637, and let's watch for any kind of possible correction. And if there's one, my immediate target is 4,385 to as low as 4,328. So do watch out for any kind of possible retracement. In the Nasdaq 100, okay, we see that the Nasdaq has actually peaked at 15,932, and we have not seen that move back higher since Thursday last week, and prices beginning is softening. And if we do see further softening, possibly the market may be targeting 14,924.6 to as low as 14,687. So these 2 levels are quite possible retracement levels target, so do watch out for those as well. In Asia, we can see that Hong Kong has a major run up this morning. Now I'm referring here to the futures contract trading in the Hong Kong Futures Exchange. You can see that market has been very strong last night when it closes, and this morning we see a follow-through buying from a low of 18,545 in the futures contract. And we can see that if this pans out, the likelihood of a larger 3-wave rally towards 20,000 is quite possible. Right now my target is at 19,847 to 20,154 in the futures contract. So do look out for a more robust rally. This is a counter trend rally, meaning to say the market is basically quite soft, and do take this advantage as the market rallies to actually reposition short going forward within this bracket of prices between 19,900 to 2,000 to 20,000. Okay, over in the Shanghai Composite Index, we can see the market also gap up this morning, and I will have to find out what is the reason for the gap up, but this is actually looking to be quite good. If this is the case, then I would think that the market has a potential to do a more robust three-wave rally, very much like what we are seeing in the Hang Seng itself. And if this is the case, there is a target somewhere around 3,285. So do look out for a challenge of the 3,276.5, which was last registered in June 16. So this is actually playing up quite well, and let's hope that market can actually continue to edge higher towards 3,276. And over in the Nikkei, this is the Nikkei 225, and we can see that this is the Osaka Nikkei. There's hardly any major move here because we are also expecting the Bank of Japan to decide on their interest rate decision. Although market do not have very high expectation, but this is a danger period because inflation is taking hold, and if that is the case, then there is ample reason for the Bank of Japan to tweak its ultra loose monetary policy to reflect a more sustained inflation situation, which has been ongoing for more than a year in Japan. So again, we will have to look at those numbers and decide as to whether the Bank of Japan may actually tweak their monetary policy. Because if they do, this will be earth-shaking because they have not done that since 2016. So do look out for possible changes in the stand by the Bank of Japan. And in the meantime, the equity index in Japan is basically holding on for dear life. In the currency market, when we look at the futures contract traded in ICE, which is the International Intercontinental Exchange, you can see that the dollar index has bounced back from 99.22 in the futures contract to as high as 101.15 yesterday, and this bracket is actually quite vulnerable for this index to come back down again, anywhere between 100.77 to 101.25. I think this area is actually quite conducive to re-establish short position for another leg down below 99.22 towards possibly 98.65. So this is my immediate target, and for those who are thinking that this may be a little bit too late now to join the game, you can always stand aside and watch how the market play out. In the euro dollar, we also saw euro also pull back yesterday night to as low as 110.60, and now the market is getting ready, in my opinion, for a bounce back, and this bounce is basically a bounce getting ready for another down leg. And if we do get a bounce, my idea will be to re-establish short position at 111.40 to 111.70, targeting at least 109.55 to as low as 108.80. So this is a possible three-wave down. So let's see how this pans out. In the sterling itself, we also see a much deeper pullback so far to as low as 128 last night, and the market may be getting ready for a bounce, and we do get a bounce back to 129.70 to even 130.10. That will be a better level to actually engage the market on the short side for a continuation of this decline from 131.40 down towards 126 levels. Okay, in the Aussie market, this is again a dilemma for me. I'm not sure what to say of this because going into today's the market low was 0.6715, and it was not even near my target area, and this morning we have a run up in prices. Currently it's trading just under 0.6770, and not sure I should be able to give you an opinion right now. I really is neutral in the euro Aussie versus the dollar. Okay, so I'm not going to comment on this currency pair for now, but in dollar yen I do have a view. Dollar yen, I do believe at 101 142 is actually quite vulnerable to the downside because this decline from 145.07, I do not believe is over yet. There is possibly another leg down below 137.25 that we saw last week, and if this trade actually pans out, I am looking for a decline down all the way to 134 to perhaps as low as 132.30. So do look out for this one leg down here in the dollar versus the yen. And dollar Canadian is also looking to rebound. I'm thinking that this currency pair here may have enough energy to target 132.70 to 133.05. So this look out for a three-wave rally here, and this is basically to sell for another dip below 130.90 that we saw last middle of July itself. So do look out for a three-wave rally followed by a drop below 131. Okay. And in the energy markets continue to trade even higher without a break. Market is now at $79.28. This is actually where I think the market has hit a temporary top in my opinion, and because previously when we look at this number, If I may, I can show you where the market actually picks out the last time. This is the level that we saw the last time in April 24th, and now we have a double top here, so to say, and this market now is looking vulnerable for a corrective pullback. If we do get a pullback here, ideally back to $73.43, 84 cents, then I think the market will have enough energy to go way beyond $80 per barrel. So if we do get a pullback here, it's actually a positive development. I have currently no position in this market itself. I'm looking to buy, but I'm not looking to buy anywhere near current prices. I'm definitely a buyer near the $74 levels. Okay. In the gold market, we can see gold having a bit of a rebound from overnight low of $1,952.80, and I would like to see this uptick here continue towards 1,972 to 1,975 levels, because I want to sell for another down leg to test the 1,945 levels, because I am still very bullish on gold. I was hoping to see a bounce back to a much higher level at near 1,972 levels before I want to go and buy at 1,945. Okay, silver market is also looking to pull back right now, as we have seen overnight. The low traded overnight is at $24.26, and if we do see a rebound back to $24.80, that will be a great level to position short for the next leg down to test the $24.10 level. So I think this is where I think the market could be looking to accumulate long position for a next run up beyond $25.27. And in the Bitcoin itself, overnight we see a dip in the Bitcoin below 29,000 with a low at $28,977.70, and I think this is getting ready for the market to rally. Do watch out for the possible rally within the Bitcoin itself, and right now this is where I am, and I'll update you again tomorrow with another update. Bye bye, take care.